Welcome, people. How are you doing? Glad to be back with you. Well, we're talking a lot recently. Things are happening. We led you up the garden path, I believe it was, when I was in London, with a false break that had quite a harsh hit down. And then we started to notice that the last 4 months, you kept being hit down. And then something changed. Powell said for the first time he might be pivoting. The pivot. Now, the pivot changed everything. In fact, too many Francis's there. When the pivots come, well, now you're going to be cutting the rates that you're paying on debt. Of course, Mr. Donald Trump wants a weak dollar and he wants lower rates. So he really says Powell's behind the curve. Powell's now bowing to political pressure and what's happening in the markets on gold. You had unemployment data today. We were suggesting on our X profile, which you can follow under the Market Sniper, we were suggesting that something was going to go down. Something was going to go down possibly on this data. And let's go and see. We called a community get together. We got going together. I mentioned to my community that I'm getting back heavily long again with very tight stops. I think that this could be the event, whether it's the data or not. As it turned out, the data was a bit of a nothing burger. Let's go and have a look and take in the charts and talk to you all about it. Buy silver, platinum, crystallized osmium. Buy your crystallized meth. I mean osmium. Something from a gent right here. Okay, let's go. Let's go have a look at the charts and stop being stupid. Yep, let's do it. We want to talk silver. We want to see gold. Let's go and have a look and get him up. That was the Euro, XAU, USD, and that's it. So what was all the chit chat I gave? I said there's a warning. There's a potential risk. There's a warning that you have progress decay for an extended period. Let's discuss that first of all. That warning's been shrugged off this month. It was a warning for 3 months in a row. It isn't this month on balance of probabilities. We're the 28th today, guys. Unless we have one hell of a slam down, in the precious metals, we will be closing up on the month much higher than the previous 4 months. The previous 4 months were 3288, 3290, 3303, and 3289. That's how it went. 288, 290, 303, and 89. Now, we are taking out some very interesting levels, and this is a triggering event. And we thought, after getting all our community in and discussing it and all those getting in, we thought, what about all those other people? We did tell you when I was in London that it was good, and that didn't pan out, so we owe it to you. We never really feel we owe it to you, but we want to help. We want to help people that want to get into the community and point out a key level was running. When I did a YouTube, I did certain, not so long ago, I'll go find it. It will take a while. Let's rather just show you. I said there's key levels, which if taken, will see us revert back to the bull side. And there were levels on the lower side that if taken, and I did boxes like this. Tell me if you remember them. The first box was in and around here, and I did it in transgender pink. And then I did one inside of that in blue, or maybe it was the other way around. Who knows? Maybe it was the other way around like this. And since then, we've been talking about a smaller, more interesting upside HVF, which we call from the right side, the fractal. Remember, the one problem we had with this gold setup was that it had a rather strong ascent to it. Initially, it was like that. Then it became like that. Still a bit steep on the high side for how it was across the top. What it needed was what we refer to as squaring up, horizontalizing. Now, if we go back and we draw the HVF from the other side, the fractal, we got something completely different. And this is what we were discussing with our community now. And this particular break is occurring right now. This is the smaller structure that is just taking in the square here. Those three. Now, the importance is being in early. So while I was talking to the community, we were looking at this candle, a look one way, go the other way candle, strong. Then you have a test to the downside, reversal back up, close higher. And I think you are currently getting another look one way. That means a trade down, go the other way. We had data that came in, and it, well, we'll cover that fact, wasn't particularly supportive for the gold trade. In actual fact, the gold market was grinding higher, thinking it might be even more supportive for the rate cut, which is obviously helping gold, the narrative anyway. I don't actually think, I can see a day that you get rate hikes and gold goes up because it'll be on a collapsing debt market. But let's park that point up for a minute. So this is a trigger for us. This is a trigger, and it's taken out that third high. This is the beginning of much more optimism and a trade that will likely then take out the high over here, this one over here. So if we go back to our original draw way back then, that's how it looks. We are moving onwards and upwards towards potentially running this 3440. You're at 3412 at the moment. Now, what's interesting about that is that there was data associated with this, and we saw it in as a community, and this is what we concluded. The data actually was a bit of a nothing burger. Let's go back to today. We are 28, just the day, please. You actually had GDP up, which is quite bullish. That points to economic growth, no need for rate cuts, okay, which was quite anti what the gold trade was supposed to want. And you actually came in slightly, ever so slightly, under the forecast of 231. So both numbers were actually supportive for the economy being fine. Less people, 2,000 less people than expected, claiming unemployment, and a growing GDP. Now, I quickly point out you get lies, damn lies, and statistics, and a growing GDP with an understated inflation actually means the dollar debasement just means number go up without not really getting real growth at all because of how much the inflation is being understated. But nonetheless, for those that buy the official stats, the GDP up means the economy is growing, it's not weak. And the less employment or unemployment, that people are too pessimistic in their expectations, which is not supportive of a rate cut, not particularly. But what happened? Let's go and have a look at that gold chart again. That's the one. We were grinding up. Now, many people of a technical nature would tell you that when you're grinding up, as we had been doing here, it was quite rising wedge-like. You could, and you may have expected, a break to the downside. There's an exception when that doesn't apply. When you are in an upside HVF funnel, where you could actually get a triggering event not too far off. Remember, we were waiting for that to get broken, which was the beginning of takeouts to the upside. Now, we can still be wrong. You could get, there's going to be quite an intense week next week, which includes non-farm payrolls, the most important part on Friday. And you could still get a bit of a slam down. So let's go to next week and highlight you what we're seeing there. Do the week, next week, thank you. So you can see there's quite an intense piece of data coming in. You're going to have the JOLTS and the ADP numbers. That's Tuesday and Wednesday. No, it's Wednesday and Thursday. Let's correct ourselves. So JOLTS are job openings. How many jobs are open? We're looking for people. And then the ADP is a payrolls company that will tell you, are they doing more payrolls or less than usual? And that's normally an indicator for the eventual NFP number. We call it fake number day for many, many reasons, thanks to the revisions and everything else. So there is data that could cause me some harm. I can be reversed. That rising wedge could have a pop out the top and sell back down, but you've taken key levels. So when you get data that's not supportive for gold going up, and it kind of nothing burgers for half an hour afterwards, hangs about, there's no real selling, and then says, the danger's gone, the big shock number that could have hurt us gone away, let's go and do what we were probably going to do anyway, but just wanted the data out of the way. And that was going up. And that's what I think we are seeing here. We have taken out key levels now, including the one that we were holding, the 3409. How does this change? How do we be wrong? Data changes on Tuesday with the jolts. In fact, it's not even jolts. Jolts is Wednesday. ISM manufacturing PMI. I don't think that's the very most important one, but it's a big number. Jolts will be also pretty important. ADP is probably the most significant after the actual payrolls number itself. So Friday is the crescendo. ADP will give guidance to it. But what we've seen with data this week is that gold got something it shouldn't have liked and went up anyway. Let me say that again. It got something it shouldn't have liked and decided it's not what's particularly supportive for us. So we're not going to absolutely moon immediately. But hey, after a bit of nothing, here it was. The news came out at 3:30. It's now 10 past 6 where I am. It had a little bit of a sell-off, looked like a shooting star type candle, this one here, and then wouldn't trade lower, and has now engulfed that candle. So the news wasn't quite what it expected, and it broke anyway. So this is quite a strong sign that we are moving out of the 300 to 350 range, and we are now in the 375, 425, $50 range potentially. And if we do run 425, that high is very much in sight. That high is our trigger for a far larger target of 3,762. So this bullishness is good, it's optimistic, and it's triggered. What's interesting is gold leads. It's kind of like Bitcoin, only gold came first. So why are we comparing it to Bitcoin? Gold leads because silver has been a little more muted about it all. You can see the king has stood up from his chair and run. Silver sat there, that was the information, and it has not gone on yet and engulfed for a new high. So that is very, very interesting. You will be getting a stretch at the moment of the gold-silver ratio potentially. Let's go and do that. You can see that we're trading up on the gold-silver ratio. Now, I also want to highlight that we gave a couple of big calls on the UK debt markets, and I want to mention, let's pull that chart so you can see it, my head's in the way. I also want to mention the US Treasuries markets, So the gold-silver ratio has broadly been heading down, had a bounce, and now has been churning in the sort of 85 to 90 range, sitting at 87.6. Now, we did also do debt markets, and so 30-year, the long end, where things are going wrong, is of great interest to me. And here's what we said on the long end. You have an upside structure on the daily time frame that wants to go up, is our view. Now, you could first go down. You can see that for today, the yields are trading down. This is the 30 years yields one day. So you can come down a little bit. You could come down a fair amount, but that won't change the structure until you run that low. So that's the point where we change our mind. So at the moment, we are in anticipation of a squeezy for a rate breakout in the long end of the US debt markets, which dovetails with the fact that it's trying to keep up with the equally stupid United Kingdom market, which is doing much the same thing. I'll just take a slightly different duration so it pops a little better, because this chart is almost better. The 20-year, it's not the same as the 30-year. I can get the 30-year up for you, but we want to highlight this structure that's going on and creeping higher in the UK markets. So debt-based collapse, yields going up on debt markets, yep. Versus, let's make it a weekly chart so that we can get a bit more color there, equals what? Well, as we said in 2020, but people only started listening when Zero Hedge had Luke Groman say it, people are substituting debt for gold. That's right. And if the debt market is going down, yields are going up, and the gold market is in a similar structure, only it's moving higher, we could be getting ready to have a bit more dollar debt and UK debt substitution for gold. There's the big 20-year structure that on the UK, it's a big one. It's on a bigger time frame than the gold one. Will end up at 75 in our view, regardless of the fact that it had a little trade up and a little bit down today. Overall, it's moving, much like a grinding, I would say, as well, very similar to the gold, where it can pop to the upside and then later run that. It won't necessarily happen in that time frame, but that is UK debt-based collapse, more buying of gold, and simultaneous to that, we could have US-based debt collapse, more buying of gold. Remember, people buy gold because they don't trust their fiat. People buy gold because they don't trust their fiat. And they also don't trust other people's fiats to run to them either. So let's have a little look. This is your update from yours truly on a Thursday morning from Los Angeles. Thank you, Sanchez. Hope you're doing well. Ben M, late night Aussie. Good stuff. Good to see you. The US constitutional framers were the smartest people to walk this earth. No two-party system, no central bank, just a constitutional republic and sound money. Yeah, constitutional republic sounds good to me. Of small government, I would argue. Munich, Germany is in the house. Hello. Calgary's in the house. Good to hear from Garth, Noel. Singapore, Andy and Go. Yes. How are you doing, Andy? So lots of people. Hi from England, says Marcus. Georgia, US. Want to leave, don't know where to go. Go anywhere to start, Trevor, and then work from there. But Indonesia, Malaysia, Bali area, all good, I think, unless you're like me and you know other places. But there's no perfect place. Get a start. I moved to Cyprus when I first wanted to leave the UK. It's far from perfect. It's an aircraft carrier for the British and the Americans to use and rent while they, help the Israelis kill kids. That's kind of where we're at. But, what can we do? What can we do? What can we do? So debt markets in, set up for contagion. If we go to a smaller time frame, and I'll go to the same duration as the US, so I won't cheat, and we'll show you there that this is also already creeping higher, as you can see. That is it, and it's a breakout to the upside. And you have bits and bobs. You go up a little bit, you go down a little bit. But if they're cutting rates, it's kind of a problem because everybody has to pay more to buy. What's happening there? We're going a little down on the US 30. Everyone has to pay more to buy debt. Who wants to buy bonds? Put up your hand. How many governments do you think want to buy bonds? Only the slave nations of the United Kingdom have been increasing their American holdings, and of course Japan. China is not. Most other nations. Russia is not. And by the way, Russia's in an almost no debt situation. The ruble has gone up 42% to the dollar. Of course, the dollar has been one of the weakest currencies this year. 12% versus the euro, down for the year. Yep. So many people think, well, what about that dollar milkshake? Aren't we all going to, suddenly get a super spike of the dollar and it's going to absolutely outperform? Not without the yen carry trade. If the yen carry trade unwinds, you're going to actually have a yen milkshake. So the yen will be the one going even higher. Who knows how deep they have borrowed for their casino in Japan. Then, of course, you could have a bond collapse that could lead to interest rates spiking. Well, that could see a lot of money leave the United States at the same time as people with offshore debt would be needing to pay it. So we've already had the tariff tantrum, guys. Here it is right here. That's the tariff tantrum. And a lot of money left America. That's what it did in the UK market. And you never went back down to this level. So what the tariff tantrum did a whole bunch of damage to all the bond markets. Well done, Donald Trump. You got everybody focusing on the debt markets and they didn't like what they saw. The British debt market, higher yields since then. What about the American debt market? Down here, that's the tariff tantrum. It's all there in that early part of April Fool's Day and the first week thereafter. And what happened? Guess what? Even though you're down on the day today, you're significantly higher than you were. Even if you take the localized high before the drop, you're significantly higher. So, where you were trading here and where you are today, that tariff tantrum, you never went back down. And in actual fact, you are now looking at the likelihood of, in the longer run, even if you come off down here, breaking to the upside. That would be our expectation on balance of probabilities, breaking to the upside for yields. How does that break down and not up? The demand destroying event comes, and this is a good season for it, and there's some fear money runs into bonds. Now, I don't see it running into the long end personally. It might run into money markets for a bit. It might run into, but when the debt markets are selling off, gold jumped immensely and hit $3,500 there. And it was at $2,900. Gold jumped $600 and damage was done to the United Kingdom debt market, the European debt market, and the American debt market. That has not been recovered. So how much likelihood do you put to Donald Trump pulling that trick again? And he said, I wasn't scared about the bond market. That means he's scared about the bond market. He was credited to say that, by the way. So that's the damage he did. Everyone can now pay more interest. Isn't that great? So he's already struggling with record deficits against Europe and China. His currency is now one of the weakest this year. And he did damage to the bond market that pushed the interest rate higher. That has to be paid to the banking cartel. He's doing a perfect job for the banking cartel that put him in charge. He's pumped interest for them to earn. He's devalued some debt and he's crushed the currency, which is perfect for screwing American pensions up and American standard of living through their buying power of their currency down. Well done. He's doing his job. Bravo. You might not like it. He's telling you tariffs. He's working for you. He's taxing you on imported goods while devaluing your dollar. That means you have to spend ever more dollars for those components that are imported, that now you're paying a tax on that you never used to pay. There you go. He's also trying to fix those trade deficits. Okay, what do you guys say? What do you prefer? Silver? You'll note silver hasn't moved, and I'd imagine it's similar for platinum. Let's go and have a look at platinum. Platinum has also been more dopey. Let's have a look at it. It'll start going when things get super hot, and then I think it will be cheap gold. Cheap gold for it. You can see it stayed in this range. We had a little bit of a move up here, and then it stayed in this range. Stayed in that range. So is it going to break up to the upside? Well, that depends on gold. Gold's going up, but it's going up on a reserve asset basis. They have a real problem. They don't have platinum. They seriously don't want anybody to trade this market at the moment. By the way, there's a weekly setup on that. And yes, you guessed it, it's going through to much higher level, 1,640s we see. But could it go down first? Maybe. You can't say absolutely. The only way we'll know is when we see what silver does. But right now, gold is getting up from its chair and moving up. That's very good for precious metals. Where's the value for me as a long-term investor? Platinum. Platinum sitting at 1,343. Some will say, but you can buy silver for less than 40 ounces, $40 an ounce. I don't know if it'll cost in your hands less than $40 if it's already 38, 39. But for 41, let's say, delivered. Yes, this has a percentage that it can go higher still because it's far more rare than both silver and gold. So it's still my best pick, but they all do well. They all do well. The good news is they all do well. You, my friend, live in the new Switzerland. Invest in your stock market. Gold miners are going up nicely, by the way. We will have, after our community have viewed it first and been able to take action, they will preview it and then we will release it on this Sunday. A chat with Don Durrett. Macro for the first half. Gold and silver miners the second half. My technical takes with his fundamental takes. We go through a core list of miners that are moving. By the way, Heckler is one of them. We can tell you that much. And it was in the HVF. We've already shown you this fella before. Let's close that. Let's close that. Yep. Let's close that as well. You can see you had a gap open here on Heckler. It gapped to here. In fact, that is not looking like a gap anymore. Why you make me look like a liar? You open higher. Let's have a look at it. There you go. You can see the gap now. Let's go to 30 minutes. That was before gold broke, by the way. So the miners, there were obviously a lot of people that wanted in. It opened there, it had closed there. So you've got a gap right up to there, you traded up there, and actually you've closed the opening gap. Often happens, that's why many people say, you'll close the open gap. Okay, so Heckler Mine, this has got a huge target. You'll see Heckler discussed on Sunday. We will release that direct chat on Sunday. Plus, those that are in our community will find out how you can get real certificates to avoid the great taking, or you can be in Don Duret's group to find out. It costs more. Understand, the brokerage of just doing a derivative deal for you is an absolute ripoff. They just created a proxy derivative. You're getting the upside as if you owned. They might hold some of the shares as collateral, many times hypothecated. Okay, so please understand that. If you actually want paperwork that says you are an owner, now that's a different thing. And none of them want to do it because you're being a pain in the ass. It's too much work. We need to get things printed. We have to go register stuff. It's a bit more expensive like that. You'll find out the true cost of real brokerage, but you can get it done. And that will save you. Why are miners not ripping? Well, they've actually been ripping a little bit quite well, without gold going up while it's been in range. So there's leagues and lags. There's also a lot of data. People who invest in equities are data sensitive, the institutions, the hedge fund managers, a lot of data to come out. So they might wait for that data to be out and see long-term what the effect is. Just a quick tick up in the gold price doesn't mean they're ready to believe it's permanent. It's only as we've continued to hold at high levels and slowly guys are getting off any forward sales they made that they're starting to mint big pots of money that you've actually started a degree of catch up on the miners. A lot more to come. Some incredible multiples, by the way, when you see those targets. Don't miss Sunday, the Don Duret chat with me, the Market Sniper, right here. Check it out. We'll have links. We'll push it through on X if you're following us on the Market Sniper and everything else. What questions do you have for me before I sign off? I will go and eat dinner. I will go be a content king lion, knowing that I am holding gold and it is looking great. Let's go and see. Let's go and see how is he right now. Whoopie daisy. XAU. 3,408. 3,408. Friday to come. One cautionary. Mr. Slammy likes Fridays. Late on American sessions, particularly on silver, but they could have a try on gold. It's a bigger market and there's buyers out east. But be careful if you're getting into silver. That possibility does exist. Okay. Why equities are dangerous. Counterparty risk. You don't own them unless you have a certificate with your name. You only have a derivative proxy, the great taking, Go and look up Mr. Webb and his philosophy there, which, bearing in mind that they don't want you to be wealthy, stealing your shares with hypothecation on ownership on miners is very, very much in script of how they are. Any blue box discount on gold? Well, we come back a little bit. So we did make a new high. So we've come back a tiny bit. You'd need to have a look on a lower time frame for that. So this current hour, they're sort of marching it back a little bit. It is a rising wedge, as I say. You can break to the upside out of them. But maybe that's a little pop out for a type 2. If we're unlucky and we get a Friday slammy, you could just come back here and have a little bit of a spell down here. You ideally we don't want that ideally to happen. But the fact that the data's out the way, there's quite a lot of support here in the sub 396 range. So 395s, 394s. For short stop placement. I'm not sure you're going to come down there, though, and fish those stops. We don't know. We'll have to see how today closes and a listless Friday. where we don't expect too much news. So we'll have to see how the Mr. Slammy on the late Friday show works out. But it's a much harder slam to do it on gold, and it's actually gold that's run. It's gold that's done the running. Good. Nicholas Louis. Yay, my brother. He loves my brother. Indian wedding season buying. Very supportive. That's interesting share. Thank you for that reminder. Karim. How about yen? So the other thing you can do, by the way, is also always look at currency, cross currency. So it's a good question. Let's throw a Swiss franc at semi-serious fiat. And what you see is you also broke out there. In some ways, it's even more than the dollar. So you wouldn't say the Swiss franc has been dominantly strong. And if we look on the bigger time frames, those daily setups, it is working its way up and out. It's not a boss yet. It's not an absolute boss. We can't say for sure. But you might have, there's your high, there's your low, and there you are now. You might get a little dip, or maybe that was it just there on that hammer. I don't know. And then you end up with the same structure. Looks like it's got a bit more work to do against the semi-serious currency of the Swiss franc. How does it look against the euro? All the big majors. I think the non-farm payrolls number will be a big igniter. Yet to run these highs here on this one, but looking strong. I think that's the highest of them all. That was at 2,931 euros. Yeah, 2,929, 2,929. So like that. So could do. This leg up, a little bit okay, not special compared to that. A little bit small, but working its way up. It's leaking up. And don't forget, we still got all of next week. It could be a trigger on gold dollar this week, but only be a trigger on the NFP news next week for euro and Swiss franc. So more muted on the other currencies. Dollar is a weakling. Dollar is a weakling. I wonder if we can get XAU ruble. We're getting a lot of other things, but not the ruble. It'll be interesting to see how gold has done. Let's do XAUUSD. And we go and take the dollar out of it and put the ruble in it. Well, we want to divide by how look the gold in rubles. Russia has recently found a huge oil well, they're telling me. You could be in an ugly break there for 133 whatevers. So generally across most fiats, looking pretty good. G-Man wants to tell you what a flip-flopper I am. I thank him. It's a great compliment. You highlight the caution of the sell-offs on 3 months in a row and say, beware, it might happen again. Here's the level where it changes our view. We let the market tell us. The 3409 is that level, and it has run it. Great. That means this month we're not closing at the 3288s, 3290s. Thank you for reminding everyone why I'm awesome. You should never say you're awesome. That's terrible. You should let other people say. Thanks for reminding me why, as a technical analyst, I hold the views that the price market behavior shows me, and I have levels for when I change those views. And the takeout of the box that I showed is, in fact, those levels. So that is it. It's always very important to have a flip-flopper, because he must have a level where he accepts he's wrong. You don't want some guy who sticks to his guns all the way down to it's going to collapse while gold's at 4,000. It costs you a lot of money if you listen to him. You shouldn't listen. You should make your own mind up as well, by the way. This is non-advisory. So Jim Soul says, here you're allowed to say I'm awesome, Jim. Thank you. No, you should always have a point where you accept you're wrong. None of us know the future. It's an on-balance of probability game. Flip-flopping is an absolute essential, because otherwise you're belligerent and you're holding on to a losing position. Great traders flip. Takes quick losses and long wins. That's it. That's a fact. You stay in the trade for long. Those are your big winners. When you're out quickly, it's a small loss. It's not the other way around. Yes, adaptable, says Immortal Soldier. Thank you. How can macro view change? It's not about macro view. It's about the price behavior of the gold at any given time. You just had data that was not supportive and it went up anyway. That is material new information. In terms of its current strength against a dollar, not so strong against the Swiss franc, guys, not so strong against the euro, but as money that is actually doing better and still up against the ruble, still up against the Swiss franc, just not ripping. It's much more brisk against the dollar than it is the Swiss franc. So it's not like killing it, but it is taking technical levels. That is why it's not a macro view. My macro view is long-term. Macro by definition is long-term. You want macro. You're looking at everything. This is eagle's eye view from 40,000 feet, the full layness of the land, who's moving where. It's going to take some time for it all to materialize, but you're long gold as an investment. That's my macro view. Okay. And that's where we are. What else have we got? Any more friends? No idea where Harry Dent is on all of this. You must ask him. Took a dip and it was damn cold. That's good for you. I chose NUGT. XAG USD we've covered. Platinum we've covered. Floor candles. Tuning in from Wales. Glad to have the Welsh. Your rugby will be back. Someday soon, the son of the coal miners. Last month, macro long, then last week changed to short and now back. Never said short, bud. So you've got a non-binary this. So here's last month you said a short. I said at levels, if run, you could profit from short and I might short it if it does ABC. The key part is the if this ABC, do that. If that, do this. It's called a decision tree. And it shows you weakness in the market and softness. You've got to understand this. Okay. So yeah, long, short, long, short. I'm just a guy who wakes up. What should I tell the guys today? Sharpen my dart. There's two colors on the board. Blue is long, red is short. No. When it shows weakness, recognize that it's contained and it's facing selling forces that it's reacting to. And say, will you continue to react? Okay, if you run that level, I'm short. Which is a key technical level. If you cease to react and now you're going up and you take another level, then I'm long. That's the game. It's an if, but. That's it. The golden American ounce eagle. Gold slamming could come because if you look at it on the Swiss. So even though we say, it's looking good, if you look at it on the Swiss, for example, that's not a killer candle. The best moments for gold is when it's killing it in all fiats. It's not doing that right now. So this could be another recant later. We could be. I can draw for you how it fails. That could be a broadening structure and we fail. If we have a terribly strong non-farm and strong jolts and the data keeps coming in different, you could still sell off for August. It would have to happen tomorrow, I think, because then August is up. Or you could close high on August and then immediately sell off down on September. So it didn't work for the month, but you get sold off. So don't lose your head. Don't get arrogant. Don't get over leveraged. It's up, but this isn't a clear breakout yet. You're still in the range against the Swiss franc. This is almost more of a dollar phenomenon than an extreme gold bull. I prefer it when you're here and you've had low vol drifting up and you have a structure like this on a Swiss franc. I prefer gold being in that situation on a Swiss franc because then it does that. And then I know it's almost certainly doing that on the dollar because the franc is generally stronger than the dollar. If it's doing this on the dollar, but it's not as strong on the franc, you could be wrong. So, yeah, there's levels that we could be wrong on the Swiss franc. I wouldn't want it to run that, the low there. So if you want to, other aspects, if you, a large part of this is just dollar weakness, some gold strength, but a large part dollar weakness, you want it to be predominant gold strength, you could close and have a stop there on the Swiss franc. So let's pull that through a little bit more, make it more clear. Looks like 2675. So it's not a ripper. It's not yet a ripper, and it does have some risk. I think it can go up. You could still have a down leg and go and still be along on the Swiss franc. So remember, when we said all those things about caution, it's not that strong. Some of that still holds against the other currencies. This is, let's go get the Swiss franc dollar up. You will see this is about the loss in buying power of the dollar is quite a large part of it. I like it when there's a big run into gold. See that? And by the way, I think it gets worse. There's another broadening structure. So you could have gold doing well against the dollar and actually okay against the Swiss franc, staying in a range, a little bit up, a little bit down. Let me move that chart. I can see my head's in the way. Put it over there. See, now I put the stream on another screen. I can actually see what you guys are seeing. It helps a great deal. So that's an ascending megaphone. That points to downside continuation. All those people saying dollar's got to turn, dollar's got to turn. I don't feel it. I don't feel it against the franc. You can try catch that falling knife if you want to. It's not my game. Pennant, bounce there, bounce there. This was huge, and of course that was the tariff tantrum, so I don't think it goes down like that. Remember the Swiss franc dollar inverted HVF. Let's show you that again. More downside for the dollar. It ain't over for me. I should say, a large part of this stream is actually the weakness of the dollar. We're still here. It ain't over. 63. We called that at 94. There's your midpoint at 92. 63. That's a 33% loss. Time will tell. They won't be able to keep low interest rates. Daniel is talking sense, I think, from the gist of it. For the treasury market will collapse. Correct. When they pump the rates all the way back up, do you think gold and silver will retain their high value? So if the debt markets collapse, what will happen is they won't be able to do auctions. They already can't do many on the long end. So they're doing more auctions on shorter term because people know it's debasement of money. They don't want to put their money out long term with you anymore because they think you're going to steal. If they have enough time, if you park your bike at your mate's house, it's okay for a weekend. He doesn't think it's his at the end of the weekend. It's okay for a couple of weeks. When you go away on holiday, he doesn't think it's his. If you leave it there for a year and a half and he doesn't see you, he starts riding it and using it and he thinks it's his. and he crashes it, and then he depicts it a bit, but then he thinks, well, he doesn't really have to, it's not his, and he starts using it, and then, next thing you come, it's like, yeah, I didn't know if I was going to hear from you again. It's kind of how it is. So long-term debt, not good. And if the long-term debt continues to go down in value and the upside HVF takes place, all that debasement will be very damaging, and it's long-term damaging to the dollar. The dollar is borrowed into existence. You can change how you are borrowing new dollars into existence on a shorter duration. That doesn't affect the dollars you borrowed into existence long time ago on 30 years, 20 years, 10 years deals. So that's what's happening. So more debasement for the dollar for us against the franc. That's what we see. And actually, you've only had one, since the real spill, which was February through to April, you had 1, 2, 3, 4, 5 down months against the Swiss franc. One of them was huge. That included Donald J. Trump devaluing debt, devaluing your dollar, increasing your cost of living, and adding tariffs to you. That's right. Americans just got taxed twice. They got taxed on dollar debasement, which means their cost of living has gone up, and they got taxed on tariffs on all the things that you bring in that might have a small amount or quite a lot of international componentry. When you don't make things anymore on any grand scale, and you bring a lot of stuff into China and Eurozone and other countries that all have some form of tariff, you get inflation, and you get cost of living debasement, and you get consumer wrecked. And guess what? A hyper overvalued stock market eventually will start to look like one. You've got a crowding out of capital in America, an absolute saturation of capital. The Swiss National Bank is like a hedge fund on the Mag 7. When that money starts to withdraw, that's a lot of dollar selling. It's also a lot of asset selling. So you had a wholesale financing Japanese economy that sent cheap money, easy, light borrowing. Those rates are going up. You've got I don't know how deep the carry trade play is. That's all got to reverse and pay back that debt as the yield gets squeezed. All the brokers and intermediaries add on to the rates. Long end, people borrowed long. People were borrowing property on Japanese yen-based mortgages. That's 30 years, 20 years stuff. That stuff's going up. Not everyone's bought property with yen-based mortgages. Some are just speculating. Some might have taken 10-year, 5-year, all those rates going up. It's getting more expensive. You're not getting that massive margin. You have to pay those loans back. The assets aren't going up at the same rate. The property market is stalling. You can have quite a crash on the property market side. That's going to make the property lower valued, less lending because nobody wants to buy the debt assets. That's contagion and a crash, and that will be majorly hard on the hegemon America. Everybody thinks America comes best out of these things. That's what the DMT guys say. America comes out best. Not they all get hurt, but the least bad. No, as the hegemon, you come out worst. It's the worst. You're falling from the highest ladder. That is a fact. So you have a saturation of investor capital in your country. You rely on 33% of offshore money to hold up your treasury market. You've already got so much money going in and not that much new money wanting to come in. You're now raising tariffs to meet your own interest bill and to pay off your own debt because not enough new foreigners are buying your debt. And now everybody's going to see a collapse in your dollar, which makes holding dollar-based assets actually not nearly as good. Even though your stock market might go up, it's 7% up from its 27% crash, but it's 11% down on the dollar. That actually means you haven't recovered the crash of 27%. You've only partially recovered it. That's your problem. And people start to see you as unstable. If that goes to 63, as we're suggesting it will, to the Swiss franc, why not hold Swiss shares that are at much lower PEs than American ones and in a currency that's not about to lose a third? Just a thought. Maybe buy gold. There you go. That's why dollar is going to be the dirtiest shirt that falls the hardest. Don't listen to those stories that because of all the way it's designed, we get off scot-free. And yes, it'll be a little bit bad for us when everyone else gets weak, but we'll be the least bad. No, that's copium. Hegemons die hard. Ask Portugal, Spain, Holland, Britain, and all the hegemons before it. The sick man of Europe for 3 decades, the United Kingdom. Read Mises. Crack up boom. In notional terms, you can have a crack up boom. 77 degrees Fahrenheit for the Dutch East India Company. I don't know about the 77 degrees, but they were certainly there. If you had, when's the monetary failure? I think at some point, you see, we're stagnating around the second interim here. At some point, we let go of this. You could stagnate for quite some time and then break down, or you could be just due to start right now. And it's very hard to see. I mean, in one way, I think the gold, after non-farm payrolls, here's what would be a shock, but this is how things go wrong. I think after non-farm payrolls, we should be trading to new highs. But could we get slammed again, as per our original bearishness on the month-end slam, but they let this month close up, but September is the quarter end, they make sure it's down on that month? Maybe. And that would then require decent data. We finish high, and then we get very strong non-farm payroll numbers. And they say, no, the economy is awesome, no rate cuts. And then they cancel the rate cut. Okay, so they cancel the rate cut, you get strong non-farm payroll numbers. The economy is awesome, no. And then Powell says, look, we were prepared to do it, but the data says. I don't think that's too possible, but that's how the gold against the dollar doesn't move any further. It's not that strong against the other currencies. It's not that strong against the other currencies. It could be dragged back into range on the other currencies. It depends how weak the dollar is. So that makes me think the dollar could fall some more short term rather than long term. This one blue line is much later. That is not too far away. So I think dollar more downside. It's already had a month where it traded up. There, that's it. The story is terrible. The deficits are terrible. They need to make imported goods so goddamn expensive, you can't afford them. That's where you're going, cost of living Americans. That's where you're going. You're going to have the worst cost of living effects brought to you by this, because they absolutely need a weaker dollar. And Trump started talking openly about it when he was always a strong dollar guy. Okay? So it's bad for America. I trade Bitcoin. We don't long-term hold it. I think other tokens will go up more. So Mr. 900,000 Bitcoin, good luck, and we wish you well. If we get technical setups, we'll take them, but it's not my hold. The statists on my hold. Where should we go? Leave. It's not about where should you go, Organic Rebecca. Sometimes it's too big a question, and then you end up doing nothing. Most people who ask, where should we go? Because they don't have the perfect answer to everything. In an imperfect world where there are no perfect options, they don't do anything, they stay where they are. And then they're still asking me 2 months, 6 months, 9 months. I've dealt with so many people in this situation, I can tell you this is a fact. Of the people that take action of any form, anywhere, I mean, even if you go to Timbuktu, it's about 2% to 5%. So waiting for a perfect answer is not right. Get a place that you can afford, a country you can go to that isn't in the West, that you can afford. You can buy, hopefully, a house from proceeds on anything you sell, and has a lower cost of living than where you are, except some aspects that might be slightly more third world, and be friendly, be kind, learn to get your neighbors on your team, make it a place that it's non-violent, and your security is decent, and that there's good, honest, wholesome people. I think, as I say, for most people, I love the quality of life I get in RSA, but I know many people it's not going to be your cup of tea. And they're all still captured, but in different ways. They're not designed necessarily as much to fall as America. Just don't be in the West and the hegemon nation. That's the key thing, particularly the hegemon nation. Very hard for Americans to leave. It's a difficult one. Most will not. Most will look at 5 years at these videos and said, I should have done it. Now there's an exit tax. Now I'm paying capital gains every time I sell my property. The government's in full tax mode. I'm going to get about a tenth of what I would have got if I'd moved 5 years ago. But it's too late. They're going to have that experience, and they'll watch these old videos in 5 years' time, and they said, if only I'd done it and just gone, instead of fascinating about the best outcome. Go, I think for a general person, Indonesia, Malaysia, Bali, these kind of places, they've got growth demographics. They're hungry to work. Generally, they're not violent. They're pretty orderly. There's some family values. You'll always be an outsider to some degree. It's hard to leave your home, but don't see this through on the downside. And then just if you need the final push, go look at the Deagle stats. Nothing good for the West in any of that. Just move, Rebecca. That's my take. I know it's hard. It's hardcore. I've just dropped you in a cold plunge pool and just ice cubes on your head. But that's the thing. That's the thing. Take your gold with you or sell it in America, rebuy it on the other side. That's what we help in with our community members. Just move your wealth offshore and get yourself offshore and optionality. You can always go back to America to visit and stay with friends and have nice times. You can always go back to Europe, UK, anytime you want, wherever your home is. You can always visit. You don't have to think of it like it's a 100% divorce, never to be seen again. You have to go kiss the ground where you stood as a child when you were 10 years. You can go back anytime. Buy a plane ticket, you can do it. Just go and get right of residency somewhere else. Cambodia, says Wealthy Spaces. He's chosen Cambodia. I'm sure it will work well. I'm sure it's affordable there. I'm sure people will, if you're polite and are respectful, even though, they're different culture, more Eastern, they will grow to like you. You'll have trees that grow things. They will extract like ticks, says Mr. Bill. Applying for Greek citizenship, good for you. Crete is nice, yeah. It's still part of the EU, but when you get more to the periphery of the EU, like Cyprus and all of this, they will be affected by EU diktats. It's a temporary place. At least you're on the periphery. You're not in Berlin or Paris, Zone 2 or something like that, but you want to eventually get out of Europe entirely. There's places like Andorra and places in that are separate from the EU and almost tax havens, or if you can afford it, go to Monaco. Not everyone can do that one, but there's if you want to stay in the European place, Bulgaria, Eastern Europe is another option. Good point. Bulgaria, no woke BS. You'll have honest schooling, honest teachers, probably a lot less danger. Yeah. Good. I'm done. Guys, thanks for checking in. There's non-farm payrolls. We will be doing a live trading day on that, by the way. Let me remind you, there's Don Durette, a release on Sunday. Don't miss that one. I'm excited for that one. Really good. Nice chat. First half macro, and then we talk the actual equities, and you're going to want to get certificates. Otherwise, great taking, and BlackRock will go, thank you. Sorry, there was a shortage of script. You had a derivative, we'll settle you in cash, which of course is devalued. All that monkey business, that can all happen to you. So don't forget to watch that on Sunday. And then next week, we will be doing live trading day. You can also get the free series that the gentleman that's going to Greece Crete was saying. It's entirely free. Go and check what we teach you at the basics level in our free mini series, a small video every day. I think there's about 5 or 6. And you get the series. We never send you any spam. Ask anyone here. We don't sell our list to anybody. You will get your videos, and that's all you'll get. And a newsletter once a month for the free version, and then there's a Substack paid version. And alternatively, we see you for the non-farm payrolls on live trading day. Go see if gold holds up. Will it continue? Will it start to move a bit stronger on the other currencies? Or will it fizzle a bit back? Now it's taken out that localized high. We'll see what might come on Friday. It looks like a key level has been broken. It looks like this month won't be squashed down. There's only a day and a half left. Till next time, I'll talk to you later. All the best for now. Bye.